We're now in an environment today where returns have been challenged, volatility has been elevated. So for all of us as investors, that can be a challenging period to operate in. We do believe that this volatility is going to persist and likely persist for several quarters, but with volatility comes opportunity for active asset managers. So it feels terrible. It's been mostly one way over the course of the last several months, but higher yields mean more income from a bond portfolio. Higher yields mean more cushion from negative scenarios, and higher yields mean a greater prospect for total return performance if we have these unfortunate events like COVID, like an expansion of the war in Europe, like other negative growth shocks, which can certainly happen in this highly uncertain world that we live in. And looking back through history, there have been other periods where there have been fairly violent sell-offs in financial markets, in the fixed income markets, which then led to a period of stability. We think it makes sense to be on the defensive side, but also acknowledge the fact that higher rates, although painful on the way up, have uncovered or introduced a bit more value in a market where value had been limited for a fairly extended period of time. And many regions of the world now have positive yields again after dealing with negative interest rates, Europe being the most obvious example. Even without taking a strong directional view on interest rates, this heightened volatility, this period where we do expect to continue to see certain segments of the market, even on a daily or weekly basis, overshoot fundamental valuations, there's a lot of opportunity to generate incremental return. And then from an absolute sense, although we as a firm still remain a bit cautious regarding interest rate exposure, at least locally, we're getting to periods now, or we're getting to levels now where longer-term valuations are beginning to look quite interesting. Again, all of this is predicated on central banks ultimately gaining control of inflation, and we do think ultimately they will gain control of inflation. It's going to take some time. There's a tremendous amount of uncertainty on the commodity front, especially with war in Europe. But when you think about yields from a longer-term perspective, when we do get back to inflation, in a more traditional range, we're beginning to see some interesting value. And we do think investors, despite having a terrible experience more recently, should continue to think about a core holding in higher quality bonds as a source of diversification across an overall asset allocation.